what if I don't really like what I'm doing anymore? Can I shut down my business? Do I have to open a new business if I go into a different path? Or can I use the same entity and just say, okay, now I'm doing this instead of whatever I was doing before? This is a great question. And there's a lot of pieces that go into play. So one thing is always, I will say on the like entity formation side of things, talk to an attorney. They're the ones that can legally advise you. So I'll talk from kind of the financial tax perspectives of doing something different in your business that you haven't done before. From the tax side of things like the IRS, one of the things that goes on your tax return is what's called an NAICS code. It's a standard industry code. It's for the insurance industries primarily, but the IRS has kind of borrowed it to be able to collect data on you and your business and compare you to other businesses doing similar things. So there's anything and everything from manufacturing to schools to churches to consultants to you name it. There is an insurance classification code aligns with it. So one of the things you need to look at is what I'm doing now different than what I was doing before? So am I now opening a retail shop when before I was doing OBM work? Those two things are very different. So it could lend yourself to, you might need to create a new entity because it is so different from what you've been doing before. You also want to look at, you know, what sort of issues are different insurance wise potentially with the new business. Like, for me, I do financial consulting, I do tax. Those kind of all fall in the same general vicinity. But if you have a retail store and you're doing consulting, those two things are different. And so your insurance policy is going to cover those things differently because the retail store, you have people coming in every single day, you have shoppers, coming in to buy all of your stuff. You have inventory, you have employees more than likely. So there's a lot of different, insurance things that you need to be paying attention to. And if you still have your consulting insurance policy in place, it might not cover those things because it probably wasn't necessary to cover those kind of things. So you'd be leaving yourself open financially to that. From the tax side of things, part of it depends on when you're making the change. Let's say you're making it January 1, so it's a brand new tax year. Okay. 2025, retail shop. 2024, this entity was doing OBM work and consulting and things like that. Consistent for the entire tax year. There's nothing necessary to change there or to like have to report to the IRS. Now I'm doing this instead of that. Um, so if you do it mid-year, you'd probably want to split that. Now it could be that like if you're reporting on a Schedule C, you just do two Schedule Cs, one for the consulting stuff, one for the retail shop. So there are ways to kind of get around some of that. And then basically the consulting one ends middle of the year, the retail shop opens up, and away you go. And then that one continues forward into the following year and the following year because it's going to be open forever at that point. So perfectly fine to change things up. But again, having conversations with a few different professionals, your tax accountant is one person, your insurance agent is another, your attorney is probably a third one. Your banker probably doesn't care because again, it's going to be the same EIN, same business, as far as like, entity name. So, you shouldn't have to change like your bank account or anything or credit cards or anything like that in that kind of switch. But, those other conversations are ones that you probably want to have just so you at least know, like, what do I specifically have to look out for? And is this a good idea? Or maybe it's just, I have to open a new entity and deal with all the ramifications of that, like filing a beneficial ownership information return. Because if you open a new entity now in 2024, you've got 90 days to be able to to file that on time and not get penalized. So when we go into 2025, at this point, that's going down to 30 days. So again, it's just another clock that's ticking in the background. Whereas if you just keep your old entity open, you still have until the end of December 2024 to file that initial beneficial ownership information return. So, and then there's other pieces like if you are opening, a brick and mortar location, you need certificate of occupancy from your locality. You might need a retail sales tax ID. You might need a local sales tax ID. So again, there's more and more pieces when you go to brick and mortar from like a consulting virtual business that you need to take advantage of, or you need to make sure that you got all your ducks in a row.